Good evening, everybody. It's me, Teresa Perrin, and I want to discuss Carvana with you tonight because I think there's a huge opportunity for this stock to squeeze. Please remember, nothing I say is financial advice. Always do your own DD. Guys, this stock has been beaten down so hard from the mid 300s all the way down to $6 and around 50 cents. It's now recovering and moving to the upside. At time of recording, it is $9.99. Guys, I do think that this could be the start of a beautiful short squeeze with today's price action. So let's get started. Before I forget, if you could smash that like button for me, it helps get the word out there and I'd greatly appreciate it. So Carvana shares surged right alongside the rest of the market, potentially for two reasons. The first is Carvana shares are heavily shorted. This says with more than 30% of available shares sold short. Guys, according to Fintel, it's over 40%, but we'll get into that in just a minute. The positive sentiment in the market gave Carvana stock a lift, which in turn spurred short sellers to buy some of the stock to cover their short positions. The second thing is that Carvana shareholders may also be optimistic that the latest inflation data could encourage the Federal Reserve to slow down the pace, or at least severity of its interest rate hikes. The Fed rate hikes have resulted in higher borrowing costs for consumers, which usually results in consumers curbing their spending on expensive items like vehicles. So guys, you'll also notice that a lot of companies that are reliant upon decent, interest rates were up today, including Upstart and Affirm, and I will be making a video on Upstart again tonight because I do think that there's huge potential in that stock as well. But all three of these tend to have something in common, right? When the market's doing poorly, they've been taking a severe beating, especially with these interest rate hikes, because guys, nobody wants to buy expensive things and have to pay a high interest rate on their purchases now. They'd rather put those aside if they can. But now that there's potentially some relief in, these rate hikes, people are starting to say, maybe I should be buying this while it's so cheap. Because if you wait, then you're going to be paying a lot higher of a price. These are like your golden opportunities here, as I like to call them. So let's see what else I am seeing regarding the stock. All right, so this is just to show you that as of August, early September, somewhere in the middle of there, this stock was trading as high as $58.05, guys. And like I said, it made its low of $6.50. And as you can see, I do believe that we got that reversal candle. And look at this nice pop today. And I do believe that it continues to the upside again tomorrow. And I do believe that pressure is going to be put on these shorts if it gets to a certain point that they just can't take their losses anymore, or they decide, I better beat everybody else to it and close this position. It's not worth it for them to hold anymore, right? Now, analysts out of the 27 that rank this, it's been given 59% say it's a hold, 4% have it as an underperform, and 22% give it a buy, and 15% give it a strong buy, guys. So there's a lot of optimism here, and the low, which I'm sure comes from whoever gave it the underperform, is a $5 price target with an average of $28.32 and a high of $100. Now, there was a crazy article that caused this stock to fall off more after earnings, saying the same analyst who gave it a $400 price target less than a year ago, giving it a $1 to $40 price target, which created even more fear and selling of a stock that was already heavily beaten up. However, I think it's, seen its max pain, as we like to say, and is now moving to the upside, which is still substantially down, as you can see. But it's also been given a positive buy signal. There's 8 bullish signals currently, and this breaks it down further for those of you that want to know. But the bias is that it's severely oversold, and the trend now is going toward bullish. And these are the indicators in green, that are the reason that it's considered now a bullish momentum. All right, guys, and let's take a look at what, before I show you what Fintel is showing us, I want to quickly show you that the volume today was crazy high compared to normal. The average 3-month volume is $11.64 million, and today it was 40.2 million. So nearly 4 times as high volume than normal, right? 52-week low, like I said, is $6.52. Look at this 52-week high. $304.33. Imagine being the lucky enough one to be shorting it up here. Guys, you know, at some point, I think that those people that were shorting it up here, or even at 200 or 100, are going to say, dang, I made great money. It's time I close out my short and take profits, because they're going to see that this is going to reverse, and it's going to reverse very quickly, in my opinion. The short interest is currently at 43.43%, according to Fintel. And there are still 150,000 shares available to borrow, with a cost to borrow of 7.61%. The short volume ratio today was 32.49%, which is significantly lower than where it's been. Look, a week ago, it was at 70.03%, and it's been all the way between that 32.49 and that 70%, with an average being in the 40s percent range of the short volume ratio, guys. Now, failure to delivers aren't really an issue right now, because tomorrow there's only 925 that were due, and then you could see they started to accumulate more, but then they slowly covered them again. It looks like we'll know more when we get the latest data. With all the shorting that has been going on, I wouldn't be surprised if we start to see those increase, especially as people are buying back these shares. But anyways, guys, that's all I got for you today. I really think Carvana has the potential to make some massive moves as long as the market continues this